Okay. Earnings per share. We're going to spend about 3 weeks, 2 to 3 weeks, looking at earnings per share. We've already spent 3, hey? 3 plus 3 plus 3. Yeah, I think we'll spend about 3 looking at earnings per share, then 3 looking at leases, and then we've got just segments and related parties left to do. So earnings per share is a big section of work. It's a strange one. In the exam, it isn't always a lot of marks, which is like a bit disappointing because it's so much work. And the reason for that is because it is so segmented that in the exam they ask it, just a piece of it, and then they'll ask it just for a few marks, which is a little bit disappointing. Okay. When we look at earnings per share, we're looking at IAS 33. IAS 33 requires you to disclose basic earnings per share, diluted earnings per share. And you're required to disclose these. If you remember in FAC3703 we did discontinued operations. Do you remember? You're actually required to split into a total and a discontinued operation so that the shareholders can work out how much is going to disappear with the discontinued. Although this is not really part of this module, because we deal with discontinued operations in FAC3702, and they don't sort of intermix the modules, especially because there might be students doing this one without the other one first. But you have to show this information for basic and for diluted. We also need to disclose dividends per share, but that's a requirement of IAS 1, presentation of financial statements. It's not a requirement of IAS 33, but it does fall into this study unit, the disclosure of dividends per share. And then we also disclose something called headline earnings per share. And headline earnings per share, we will show basic, it's called HEPS, and we will show diluted HEPS. And headline earnings per share is a requirement of the JSC rules. It's a JSC requirement. IAS 33 says you must disclose basic and diluted for total and for discontinued, and you are allowed to show alternative earnings per share numbers if you want. And so in South Africa, we disclose headline earnings per share. It's a number that is required for listed companies. It's required by, it's a number that's required by the JSC. And there is a South African circular which teaches us how to do the calculations for headline earnings per share. So pretty much the way we're going to split the lecture is this week basic, next week diluted, and in the last week headline and DPS. Okay, so let's start with the first calculation, which is basic earnings per share. Basic earnings per share is, and earnings per share is disclosure only. Yeah, maybe I should just go back. Earnings per share is disclosure only. It's all about, I say disclosure, but it's at the bottom of the statement. But there's no journal entries, there's no measurement, It's just something extra disclosure that we do. It's not part of your trial balance in any way, and we won't see journals. So most of the time they either ask disclosure or calcs. So they might just ask you to calculate, or they will ask you to disclose. All right, so basic earnings per share. There's a formula which is profit attributable to ordinary shareholders divided by weighted average number of shares. Profit attributable to ordinary shareholders divided by weighted average number of shares. Okay. So, we need to do some calcs sometimes to get the top number. We need to do some calcs to get to the bottom number. I'm going to start with this top number first. Profits attributable to ordinary shareholders is after NCI, after Pref-Div. Do you agree? All those people get paid first. Yeah? So the profit that comes through in my P&L, NCI gets some of that. The rest is for the owners of the business. Then who gets paid next? The Pref-Div gets their dividend, isn't it? Pref-Div paid. Then we have a problem with cumulative Pref-Divs. After cumulative Pref-Div. And this one's important because even if it isn't paid, I must adjust for the cumulative. Why? Eventually they will get paid, isn't it? The way a cumulative pref share works is, let's say the cumulative pref shareholders should get a dividend of 20,000 Rand. Out of this year's profit, he's entitled to 20,000 Rand. Whether I choose to pay him now or whether I will only pay him later, when I eventually pay dividends, I have to pay him that money, isn't it? So I will always deduct cumulative Pref-Divs, whether they are paid or not. Ordinary Pref-Divs, only when I pay a dividend do I have to pay the pref first. If I choose not to pay a dividend, I won't pay anybody, then nobody gets a dividend, isn't it? Ordinary Pref-Divs do not accumulate. I don't have to catch up years that I missed. In those years, nobody got a dividend, isn't it? But cumulative ones do accumulate, and I have to catch up. That's why with cumulative ones, I put them in even if I haven't paid for them. Okay? The other thing that I adjust for is I adjust for discounts or premiums on Pref-Shares. When I issue Pref-Shares at a discount or when I redeem Pref-Shares at a premium, these discounts or premiums are deemed to be dividends. And so because they're deemed to be dividends, I will have to account for them as dividends when I do earnings per share. Okay, we're going to look at a couple of examples of those. So this is the first sort of adjustments that I make. Adjustment 1, when I'm doing the calculation of basic earnings per share, and I'm looking at this profit number. Yeah. All right. In your study guides, it is example 1. I've got last year's study guide. It was on page 112. Should be more or less there. What? 112? 114. The following is an extract of the P&L and OCI of a listed company. We know that we want to start with this number. Profit attributable to owners, isn't it? So I'm not going to start with the 42. I'm going to immediately just start with the 32. I could start with the 42 and take off the 10 and then land up on the 32, but I'm not. I'm just going to immediately start there. Okay. The following information was obtained from the statement of duty. I paid a Pref-Div of 12. So attributable to ordinary shareholders is 32 because 8 or 10 went to NCI, and then less 12 because that went to Pref shareholders. So attributable to ordinary shareholders would be the 20. Yeah. So if you look down at the calc, they show a short calc, which is the way that I would do it. You start with the 32, you take off the 12, and you're left with 20. They also show some alternative methods where you start with the profit before tax and then you work down. I suppose it just works through that principle, isn't it? This is the profit. Who gets paid first? SARS. Who gets paid next? NCI. Who gets paid after that? Pref shareholders. Who gets paid after that? Ordinary shareholders, isn't it? Just along the list. Okay. So they have a number of ways to do the calculation, but it's pretty much that one at the top is the one that I would recommend. They also do one where they work backwards from retained earnings and add the dividend. I suppose if you weren't given any information, you could work backwards, isn't it, to work out what it is? Okay, so that's the first example. Then there's an example which has pref divs in it, example 2. I think it just follows. There's tons of examples for earnings per share. So here they say the profit or loss for the year was a loss of 2 last year and a profit of 14 this year. Last year they didn't pay any dividends because they made losses. But when we look at our capital structure, we have some odds, we have some prefs, and we have some non-cumulative prefs. Okay, so this is interesting. I have sometimes seen it like that. So instead of saying that they have some prefs and some cumulative, they tell you that they have some prefs and some non-cumulative. So you're kind of having to conclude, therefore, that these must be cumulative because these are non-cumulative. Yeah? But usually they give it to you the other way. They say these are prefs and these are cumulative prefs. You've never heard that term, non-cumulative, isn't it? So I don't know, it's just a bit weird. All right, so when we look at the information, what did I say to you about cumulative prefs? I have to put it in, isn't it? So I would start with the loss of 2, and I would have to put in that cumulative pref, which is 10%, and remember, it's always on the rand amount. Do you remember pref divs from 2601? No. Pref divs on the rand amount. 10% of 10, which is 1. And I would say less 1, which is for the cumulative pref, and I would say that the earnings attributable to ordinary shareholders is a loss of 3. In the next year, I start with 14. I again would only take off the 1. Even though what you'll see is that in that year, they paid 2. Why did they pay 2? They paid last year's 1 and this year's 1. But I'm not going to subtract 2 because I already subtracted 1 last year, isn't it? With cumulative ones, I take off the dividend that accumulates, not what was paid. I don't worry about when it's paid. Okay, and then for the remaining prefs, for the non-cumulative, it's 20% on 15, which is 3. I take off the 3. And so then in that year, the profit attributable is 10. So when I'm working out earnings per share, in that year it's minus 3, and in that year it's 10. Make sense? I take off the pref div paid, except if it's cumulative. If it's cumulative, I take off the pref div accrued or accumulating. It might equal paid, it might not. You see, in this case it didn't, isn't it? Because in this year there was nothing paid, and in this year there was 2 years paid. So we must just make sure for cumulative ones, we take off what accumulates, what accrues. And for the others, we take off what was actually paid, because the others don't accrue. Yeah? So when you look at the solution for that one, you'll see they come out at a minus 3 and a 10. They come out at a minus 3 and a 10, and then they work out an earnings per share. Earnings per share, by the way, we can already see it here, is normally in cents. Yeah? Or you can see it here in rands, but normally it will be cents per share. So it's a 2-cent loss per share there, and a 5-cent profit or earnings per share there. Okay. If you just continue looking at the next example, example 3 has to do with a discount. And it says that 1,009% prefs were issued at a discount of 22,800. So I didn't issue them for 5,000 Rand. I issued them at a discount of 22.8%. So what is that? I issued them at 6,1. No. Is it 3,860? Okay, here it is, 3,860. Okay, so I issued them at 3,860, which means that the difference of 1,140, I'm going to have to account for as dividends. Do you agree? Okay. So the difference is going to be these three numbers. There, is the 1140, which I'm going to say is a dividend. I'm going to do a little squiggly. It's a deemed dividend, isn't it? If we read the question, it says, this discount is calculated by discounting an annual dividend of 450 at 9% over a 3-year period. According to the dividend payment terms, these shares will not be entitled to dividends for the first 3 years. So all they've done is they've discounted that dividend of 450 over 1 year, over 2 years, over 3 years at 9%. Yeah. So if you do that on your calculator and you do it, that for 3 years, that for 2 years, that for 1 year, that's the numbers you get back. Do you agree? That's what you get? All right. So when you add the 3 up, it adds up to the 1140, and from year 4 onwards, they will get their 450 of dividend, isn't it? But before that, they won't get their 450 of dividend, their annual dividend. And so all we've done is we've discounted that annual dividend over the 3 years, and that will be the deemed dividend. So in our earnings per share calc, we will show a dividend. This will be the number, but we know that it wasn't a dividend paid. It was just that we basically paid it at the beginning, because when we issued the prefs, we issued them at a discount of that money. Okay. So that's an example of shares that we issued at a discount. Here they have an example where they redeemed them at a premium. So it's the opposite. Yeah. So they say the excess of consideration paid over the carrying amount will be deducted when calculating earnings per share. Therefore, if prefs with a carrying amount of 10 are bought back for 15, that extra 5 will be deducted as an expense and will be shown as attributable to pref shareholders. Yeah, it will be a dividend. There's also an example, or just a story really, of an incentive that was paid for early conversion. So this is, we want them to convert into ordinary shares early. We pay them an incentive. It's like giving them a sweetener. It's a dividend, isn't it? Those are all dividends, deemed dividends. Okay. So that's the first adjustment to our basic calc. This was our basic calc. Basic EPS, profit attributable to ordinary shareholders divided by weighted average number of shares. Okay, so the first adjustment, number of shares, was all those adjustments for prefs. The second adjustment that we make to this number comes about when we have more than one class of shares that share in profit. And the one that we will come across, because when there's more than one class of shares that share in profit, we have to do multiple earnings per share, isn't it? So if we have A and B shares and they share differently in profits, we'll have to have earnings per share for A shareholders and earnings per share for B shareholders. Do you agree? The ones that we will come across are called participating prefs. Participating prefs. And when we have participating prefs, we will have two numbers. We will have earnings per share for my ordinary shares, and I will have earnings per share for my participating prefs, because they're both getting a share of the profits. Okay. When I have the participating prefs sharing in profits, they will give you the information in one of two ways. They will either say to you that the profit split is a certain percentage in total. So they may say it's 80-20 in total, which means you're going to take the total profit and just go 80-20. Yeah. So if I said to you that the profit of the company is 10 million, then I would just go 80, 8 million, 20, 2 million. Yeah. Or the profit might be split on a per share basis. Per share basis. When it's on a per share, it's not just the 80-20 that comes in, but I also need to look at how many shares one has and how many shares the other has. Because if there are lots of odds and only a few prefs, then per share it's 80 cents, 20 cents, isn't it? But because there's so many more odds, they'll actually get a much bigger percentage and the prefs will get a smaller percentage. So there's a couple of examples in your study guide. It's over here, example 6. No, let's look at example 6b. 6b is the easier one. Let's start with 6b and then we'll work our way to 6a. And then you're going to try and do 7 on your own. Okay, so if the conditions of the issue are that the pref shareholders would share in profits 1 cent for every 4 cents in total, yeah, then the profit of the company is 25 Rand. They will share they'll have 4 cents, they'll have 1 out of 5, and they'll have 4 out of 5, isn't it? So they'll get 20 and they'll get 5. Does that make sense? All right, so that's when it's in total. We don't care about the number of shares. We just say if that's the total profit, 25, it gets split 4 over 5, 1 over 5. Okay. However, if we go back to 6a, if they say to you that the participating pref shareholders are entitled to 1 cent per share for every 4 cents per share, then it's a completely different story, isn't it? Because then we have to look at the number of shares. Do you agree? And if we look at the number of shares, here they are. It means that when they get 4 cents, yeah, they get 1 cent. Do you agree? So if I just take just this as the numbers, I get, is it 500 times 4 cents? I'm working like in big thousands. 20. And 200 times 1 cent is a 2. 2. Okay, you see how they're sharing? It looks nothing like 4 to 1, isn't it? It's actually 10 to 1, isn't it? So it's 22 and 22. So if the profit of the company was 25, which it was in our previous example, I see here they cheated and made the profit 22, then it makes it easy to work out, isn't it? But if the profit was 25, which it is in our next example, or the one we've just looked at, then we would say 2 out of 22, and they would get that, and the others would get 20 out of 22, isn't it? 20 out of 22. So they would get 20 out of 22 times 25. 22.7, let's put it in as 22.7. So they get 22.7, and they then get 2.3. Yeah? Okay, so we always need to be very careful. If they don't say per share, we don't use the number of shares at all. We just take it and allocate as they give it, if they say in total. If they say per share, whatever they've told you, 4 cents, 1 cent, we multiply by the number of shares because it has to have that extra weighting, isn't it? 2 different weightings, one for the number, one for the percentage. And then we do a new percentage. Yeah. So our numbers here were 2, whatever. You could land up with anything here because you could have said, I'm going to assume that it was a 2 Rand dividend. So then how much would they get? You can make any assumptions as long as your proportions are right. Yeah. Okay. When you are doing this participating pref allocation, what you need to do is split the profit. Do you agree? So you're going to work with a table. You're going to work with a table, and this table is going to have a total column. It's going to have a pref column, and it's going to have an odd column. And you're going to start with the profit of the company, 25. And then you're going to allocate it, isn't it? Then you're going to say, and this one that I've shown you here is quite simplistic, because sometimes the way that they share profits is they'll say things like, first, the pref shareholder will get their dividend, because they get a percentage dividend. Do you agree? And it's fixed. It's in the contract. So then they'll say, first we'll pay a pref div. And that's according to the percentage. I don't know, let's say the pref div was 2. He gets 2. Yeah. Then they say, after that, we'll pay an ordinary div. Okay. So he also must get a dividend if he gets a dividend. So let's say he gets 5. We give him 5. And then they say, whatever profit is left, 18, is split on whatever basis. And maybe we land up with an 8-10. Yeah? And then we land up with totals. 10, it doesn't, and 15, which is the 25. Yeah? So, you guys are going to look at example 7. I don't want you to look at the solution. The solution is a whole page long. But they've got lots of things in there that you don't need. I don't need you to get confused about right now, okay? What I need you to do is just in a table, no, not 7, 8. In a table, I want you to start a table and to start with profit for the year in that table of the 1130. And then based on the information that you've been given, I want you to split that 1130 between the prefs and the ords. And the way the information is given is a little bit complicated because look, first of all, we have cumulative prefs, so they will immediately get a dividend always. Do you agree? So we have cumulative prefs, they will immediately get a dividend. It says each participating pref is entitled to half of the ordinary dividend per share after the payment of dividends of 10 cents a share to ordinary shareholders. So the 1130 is going to go first a cumulative pref div, then 10 cents a share to ordinary shareholders. What's left is going to get split half to 1 per share. So you're going to say 10 and 5, 2 and 1, 1 and a half, whatever you want to say. But you have to then multiply it by the number of shares to get your split. Okay, you're going to try? All right. Participating prefs. And yeah, if you look at the solution, if it's there in front of you, but I don't think it is, huh? It's like a whole page, which is crazy. It's confusing, huh? Did you get that? So we started with profits of 1130. Then the cumulative pref must get their dividend because it's cumulative. So he gets his dividend first. Even if it wasn't cumulative, because we put in an ordinary dividend, he would have got his dividend first, isn't it? So he gets his dividend. His dividend is 10% of 500,000 Rand. It's 50. So 50 goes to him. Then they say that after that, first the ordinary guy must get a dividend too. So he gets 10 cents a share. It's 400. It leaves us with 680. That 680 is split half of the ordinary dividend per share to the pref shareholder. So I just made up a number. I said there are 4 million shares. If the ordinary dividend gets 10 cents, then the other one gets 5 cents. You could have said 1 Rand, 50 cents, 2 Rand, 1 Rand, whatever, it doesn't matter, as long as you got a proportion. And so I landed up with 425, 25 over 425. But don't round there, because if you round there, then you'll end up with funny numbers. So unless that works out to a round percentage, don't round it, leave it like that. So then I said 680 times 25 over 425 gave me around 40. I was happy with that. And then when I did the other one, it gave me 640, but it anyway needs to balance. So I knew the other one was 640. And I get then a total. The split of the 1130 profit goes 1040 for ordinary shareholders and 90 for pref shareholders. Yeah. You'll see the solution. So that's all you need, because if they ask you to work out the earnings per share, this question asks you to do earnings and dividends per share. But if they just asked you to do earnings per share, that's all you need. You've got the number of shares. You can work out dividends per share, isn't it? They do a big calc where they first start off by trying to work out the rights, the percentages, and they actually come out with percentages and work out ratios. I don't know, all that just to do that ratio. Then they start with profit, and they do the same calc that we did. they now use their ratio 1 to 16 is what they said is their ratio, and then they actually do a calc for the dividend. The dividend is actual dividends paid, but we'll get to dividends. It will be the last thing that we look at in the module. Then number of shares given, and we get an earnings per share. Earnings per share, did they ask for disclosure? I didn't put it down. Earnings per share is disclosed in the P&L, at the bottom of the P&L. Earnings per share is disclosed right at the bottom of the P&L. Dividends per share is disclosed in the statement of changes in equity, because it comes out of there and it would be shown there. There is a note as well, but the note is more about the number of shares than about profit, but I'll show you a note when we get to a question that has a note. Happy so far? Okay. So we go back to our formula. Those are the only two adjustments to the profit, right? It's getting to the ordinary shareholder number, so we take off pref divs. Usually you're going to just find pref divs. Sometimes NCI, usually just prefs, okay? And then sometimes participating shares, but it's not very common to see those. We now move to the bottom of our formula, basic EPS, and the bottom of our formula, the top is profits attributable to ordinary shareholders, and the bottom is weighted average number of shares. Okay, so the first thing I need to talk to you about is this whole concept of weighted average. What does it mean if I say weighted average? And the principle behind that is that if I issue shares for money, I will only be able to buy assets once I receive that money, and it will only affect profit after that. Do you agree? And that's why we weight the number of shares. If I have a share issue halfway through the year, I only put half the number of shares into my calc, because that money only affected profit for half a year. I only can get money to issue shares. So the weighted average number of shares is from the date that I receive my consideration. So what is this consideration for the issue of shares? For issuing shares. What is this consideration? It could be cash. It's mostly cash, isn't it? I issued shares for cash. I issued them halfway through the year, I will wait them for 6 months. I issued them 1 month before year end, I'll wait it for 1 month. I issued them 2 months into the year, I'll wait them for the 10 months, the remaining months, isn't it? So from the date of the issue to year end. So let me say at the top, from the date that I received the consideration for issuing shares. Mostly it's cash. It could also be assets. So this you have to be very careful with. They say to you, we issued shares on the 30th of June for a property that we bought, but the property transfer went through in September. We only had the asset from September. I can only wait from September onwards. Before that, it didn't affect my P&L. I didn't have the asset, isn't it? So I take it from the date that I have the asset. The other time that we see sometimes a issue of shares is for an acquisition of a subsidiary. They call it a group, a combination. Yeah. So I issue shares when I buy a subsidiary. You saw that in FAC3704, we see it. Hey? Again, I'm only going to weight it, not the date I issued the shares, because maybe I'm only going to issue the shares in December, but I acquired the subsidiary in June. I'm going to weight it from June. When is the profit going to be in my group profits? From June. And maybe I'm waiting to finalize the numbers before I actually issue the shares, isn't it? So we don't look at the date the shares are issued. We look at the date the consideration is received. And often, if it's cash, it's the same date. Or for practical purposes, it's the same date. But just be very careful in the question. If you get given 2 dates, it's the date the consideration is received. We weight it from that date so that we can get better matching here, isn't it, of profit and number of shares. Okay. So that's number one. Number two has to do with when we have capitalization issues. You've heard of capitalization issues? Cap issues, they're called, or bonus issues. Cap issues or bonus issues have no consideration. It's also when I do scrip dividends. The important thing with this one is there is no consideration. I give free shares for some reason. There's no consideration paid at all. So when I have cap issues and there's no consideration paid, I will not wait, because there's nothing to wait, isn't it? So the rule here is don't wait and restate. Now, I thought I had put that example in, but I'm going to tell you which example to go look at, and then I'm going to find it, because I saw that I didn't have it. Obviously. I think I might have it after. Example 14. And I think I might have it. Let me just check. I have it on page 134. I have example 15. Okay, no, I don't know what happened to it. I had it. Example 14 on page 134. You're going to do this one for me. And what you're going to do is you're going to prepare a calculation of weighted average number of shares. The calculation looks like this. Total, current year, prior year. Okay. You're going to, and remember that it is number of shares, the calculation. Weighted average number of shares. You're going to start with beginning of year. And you're going to put the number here, here, and here for beginning of year. Yeah. Then you're going to do the movements. The movements you're going to wait if there's waiting, and not wait if there's no waiting. Yeah. But what I want you to do is I want you to rule off after every movement, just to total after every movement. So you're going to have two movements. You're going to have a normal issue, and then you're going to have a cap issue or a free issue. So you're going to start with beginning of year. You're going to have your issue. Then you're going to rule off. And then you're going to have your cap issue. And you're going to have your totals for your weighted average number of shares. When we get to your cap issue, remember, don't restate, don't weight it, and restate it, right? And just look at your proportions of how many shares you're issuing. Yeah. The cap issue in this question, example 14, is a cap issue of 1 for every share. 1 for 1. Yeah. So we're going to start, example 14. They had the following issued shares. I don't really worry about the cumulative prefs for weighted average number. That's for the profit calc. Yeah. I'm going to start with 1,000 shares. No, 4,000 shares. Sorry, that's rands. I'm going to start with 4,000 shares in total. It goes into my total column, 4,000. According to that total column, I need to end on 10. Do you agree? I need to end on 10. Because they say to you that prior year was 4, end of year is 10. Yeah? It looks a bit funny the way the information is given. How did we get from 4 to 10? Well, this happened. On the 1st of July, I issued 1,000 shares of 1 rand a share. And then on the 1st of October, I did a cap issue of 1 for 1. Okay, so remember, my normal issues, I will wait. My cap issues, I won't. Okay, so put the numbers in for me. Let me see. Give it a quick try, and then I will show you. I just need to... move this a little bit this way. A normal issue of 1, I land on 5. A 1 for 1 over here is another 5, and I land on 10. I start both of them on 4, and the first one I will wait for 6 months. Okay, let's have a look. We start the year on 4. Halfway through the year, I issued 1 for cash. I must wait it. I must wait it according to that date. They didn't give us any other dates. We have to go with that date. I issued 1. My total goes up by 1. But I'm only going to wait it for half a year. So in the current year, my number only goes up by 500. And it wasn't there at all last year, isn't it? So last year stays 4. Then I did a cap issue of 1 for 1. I didn't get any value for that. So I have to follow the rule. The rule says don't wait it. The waiting would have been October. It would have been October, November, December. It would only have been 3 months. But I'm not going to do that. I'm just going to do a straight 1 for 1. So I do a straight 1 for 1 and I land on 10, which is the answer they have, so I'm happy with that. But then look, the rule is that I restate the other numbers in the same proportion. So that year is 4.5, that's what I had. I put in 4.5, 1 for 1. And that year was 4, I put in 4, 1 for 1. And the reason I do that is because if I don't, my earnings per share is going to look completely whack. Because I didn't get value for that extra doubling of shares, did I? So my profit's not going to double. My profit isn't going to double. I didn't get value for that. So it's going to look like my earnings per share halved if I don't adjust the comparative. Do you agree? And that's why I adjust it. I didn't get value. It didn't affect profit. So therefore, I mustn't weight it. But I must also adjust the comparative so that I get a fair number when I look at the two comparatively. Do you agree? All right. So that is example 14, sorry. And I thought I had pulled all the pages and something must have happened when I did the print. Forgot that one. All right, so weighted average number of shares, weights from the date that I receive the consideration, and that's for normal issues when I'm actually getting something. Cap issues or bonus issues when I'm getting nothing, the rule is that I don't weight, so I don't worry about the date of issue at all, but I restate my comparatives in proportion, and that's what you saw there. The third scenario that we sometimes see with weighted average number of shares, so I'm still talking about basic EPS. I'm still talking about this formula, profit over weighted average number of shares. The third scenario that we see where the number of shares changes, we've seen where I issue shares for money. We've seen where I give shares for no value. The third scenario is where there's a rights issue. And that you know from MAC, isn't it? In MAC, I keep going on about rights issues being a cheap way of raising equity finance because rights issues are to existing shareholders. I don't have to, they're quicker, they're cheaper to do. You don't need to do so much homework or persuading. Rights issues. Now, rights issues, if I give a rights issue at fair value, is not a problem, isn't it? But the problem with rights issues is that rights issues are usually below fair value. Almost without exception, rights issues are below fair value. Why is that? I take into account the fact that if I was to do a new issue, it would cost me money and it would take time. So that benefit I pass on to the shareholder, number one. Number two, I really do want this shareholder to give me money, so I give him a sweetener, isn't it? Because if he just wanted to buy shares and he wanted to pay fair value, he could go buy them on the stock exchange from a previous shareholder, isn't it? So I actually want him to buy them from me. And usually these rights issues are below fair value. So what happens with a rights issue that's below fair value is that I'm going to split the way that I put them into my weighted average calc. I'm going to split my rights issue into the number at fair value and the number that I'm issuing for free. Then these ones I'm going to account for as a normal issue account. I'm going to put into my calculation as a normal issue, and these ones I'm going to put into my calculation as a cap issue. Okay, let me show you an example that I'm going to make up. Let's assume that I did a rights issue and that the rights issue was 1 for 5. That should have like I struggle to do dots on this thing. I have to do them like very far apart from each other. Okay, let's assume my rights issue is 1 for every 5. And I'm going to do the rights issue at 20 Rand. The number of shares that I have before the rights issue is, no, not a Rand. The number of shares that I have before the rights issue, let's say, is 1,000 shares. And I'm going to do, and the fair value of the shares was 25 Rand. So I'm giving them at a discount of 5. Yeah? Right, so the first thing is to work out how many am I doing. How many am I doing? There were 1,000. I'm doing one for every 5. I divide by 5. It's 200. Do you agree? 200. Now, the 200, I have to split it. How much is at fair value and how much is free? Yeah. Now, this 200, which this translates into, the shareholders are going to pay me 20 Rand a share. 4,000 Rand. Yeah? Agree with that? So 1 for every 5 is 200. At 20 Rand a share, I'm going to get 4,000 Rand. If they had 4,000 Rand and they went to the market, how many shares could they buy? $160. 160. So that is the calculation that I do to split. Then I say, for the money I got, 4,000 Rand, at a fair value of 25 Rand a share, 160 is how many I would have got at full value. So therefore, 40 are free. So then I do my calc the same way that you've done the calc just now. So total, current year, prior year. I start with my 1,000. Then I do my rights issue. The first piece of the rights issue is rights at fair value, 160, and I land on 1160. Then I have the free, 40, and I land on 1200, which is what I need to land on. Do you agree? Now, the first piece, I've got to wait. I got money for it. I've got to wait it. I'm going to assume it's a quarter of the year. No, it doesn't work that way, does it? Can I just, is it 40? 40, 40, 40, I think so, hey. Okay, I'm going to wait it. I'm just going to assume it's 40. So I'm going to wait it, and I'm going to assume that it was in issue for a quarter of the year, and so a quarter of 16 is 40. Yeah. What I'm assuming is that the rights issue was done 3 quarters into the year, and there was a quarter left. Yeah, I've got to wait not how far in, but how far from that date to year end. And of course, nothing goes there. Do you agree? My totals look like this now. Okay, now this is where I need to be careful. I need to apply this proportion here and here. That proportion. So what is the proportion? 40 over 1160. Does it work out at a round number? Somehow I doubt it. No. So I say 40 divided by 1160 times 1040. And I get 36. I've just rounded it. And I get 1076. And then I do the same with 1,000. And I get 34. I've also just rounded it. And I get 1034. The principle is exactly the same as what you learned, isn't it? Now, this is the way that I recommend you learn it. If you don't want to learn it that way, the way that it's taught in the... I'm just going to show you the formulas. The way that it's taught in the standard is with these 2 formulas. These 2 formulas work out a theoretical X-right value per share, and then from there it works out an adjustment factor. And then you multiply the adjustment factor by the rights, by the shares, to get a weighting. It's horrible to use. Because the other method is already anyway what you would have had to learn to use if you had a normal issue followed by a cap issue. Do you agree? So I wouldn't recommend this method. I sometimes come across honors students who use it. And in honors, the formulas are in your assignment, isn't it? Or in your assignment. They're in your books. And it's open book, so you can just flip to where they've got the formula and plug your numbers basically into their example. They've got examples. But I wouldn't suggest that for you use this method. I would suggest you use the method that I've just taught you. Yeah, UNISA calls that the proof method, proof. And they say you may also use this in the exam. But you can see here's the whole calc. There's the rights, there's the factor, and then you're still having to wait. So it's a whole argy-bargy there. Yeah? Okay, so I wouldn't do it that way. I would do it the way that I've taught you. So have a look at example 15, rights issue at less than fair value. So all you need is this bottom bit first. Example 15, page 139 is my guess. We have a capital structure, ordinary shares, and we have a movement. You can see a movement in ordinary shares. Ordinary shares started at 500,000 shares, ended on 800,000 shares. Don't worry about the prefs. They're not participating prefs. I just want you to work out weighted average number of shares. Do you agree? Prefs, I only worry about the dividend because it affects the profit number. And then I worry about if it's participating and they share in profit, but it affects the profit number. Pref shares never affect weighted average. Okay, weighted average number of shares is for odds. So I'm going to start with 500, and then there's something going to happen that's going to make me move to 800. Let's see what that thing is. I presume it's just the rights issue. On the 30th of April, they had a rights issue, 1 for every 5 at 2 Rand a share. The market price prior to the announcement of the rights issue was 3.50 Rand a share. Management considered that for the issue to be successful, they would have issued at 3 Rand, which is fair value. They're just giving you too much information. But we use fair value. Yeah, fair value. So we're going to use 3 Rand fair value. We're going to use the 2 Rand, which is what I paid for the rights, to work out the free piece. It's basically a third free, 2/3 value. Do you agree? The numbers are simple here. And it's 1 for every 5 held. And then in addition to that, a couple of months later, there is a cap issue of 1 for 3. So you're going to have a couple of movements. You're going to have 3 movements. You're going to have beginning of year, then you're going to have rights at fair value and have a total. Then you're going to have rights at rights free and have a total. Then you're going to have your cap issue and a total. And in your total column, this bottom total needs to be whatever that total was on the previous page. What was it? On the previous page, they said, no, it's on the previous. We had 500 and we now have 800. So if I look at my numbers here, I'm going to start with 500 up here, and I should end on 800 down here for my total column. If I don't, something's gone wrong. But then in my current year and prior year columns, I'm going to do weightings, I'm going to restate, isn't it? I'm going to proportion to get the numbers. Let's see how that goes. So I've put the solution up so you can have a look. If you're on the right track as you go, you can check your subtotals. Remember I did say to you when I was showing you, you should just subtotal after every issue, because then it just helps you to make sure not to make a mistake with the numbers. And if you want to first do your total column completely before you start weighting, that's also an option, just to make sure that you balance. Yeah, because often they will give you the numbers at beginning and end to enable you to check if you're balancing. I don't think you need to have such like big calcs. Say, I see you as well. They have all these calcs in the brackets. I'm not sure they're worth it, because I don't think it's worth more than 1 mark per number, you know. Otherwise, it's just masses of marks just for that. So I think it's either going to be right or it's going to be wrong. I don't think that there's space for like, or need to have workings here, to be honest with you. You probably will do a little working for the split, but other than that, what's happening?
Get it right.
The split?
Yeah, I did get it right. It's just like erasing it. No, it's on the bottom of this.
Yeah, you can. They are busy, but Some of them are done, some of them are not. I don't suppose it took it. I mean, there weren't even a lot of students on campus that week. It was the week before lecture started, remember? Plus, I've had it for so long, and I always just leave it lying around, and it's never gone missing. But I looked on Gumtree, and there was someone in Bedfordview selling one that looked just like mine. But I'm a bit scared to phone people and say to them, meet me. Just now they hurt you or something. I don't know. Aren't you scared to? Yeah, like what? Say, I'll meet you at the gym or whatever. We'll see. There will come a student sauntering across from Boston with my calculator. And he'll spin me some story how it was belonged to his mother or something like that, isn't it? So Craig's dad used to work for HP. So he's always saying how he has all these HP calculators lying at home. But so I said to him, well, if you've got one of those old ones lying at home, bring it for me. But you know what? He doesn't even bring one for himself. He arrives here and he doesn't even have a calculator. You saw earlier. What's a space case with his stationery in? No. He's much too chilled. Is he? I don't know. He's latched on to Craig, so today he just sat and watched Craig. Do you know he didn't pass because last semester he sat and watched you? And now he's sitting and watching Craig. Well, I don't know. He didn't know what you were doing last semester anyway, so it doesn't matter.
But I always had to work with him.
Huh?
I always had to work with
Yeah, you did. He insisted. Yeah. But it didn't seem to help him because he was... And then he still said to me, no, I only missed it by 1%. But he got 39.
If he got 40, they would have had the
But if you get 40, do you pass if you've got 100% for the assignments? Oh. But you don't deserve if you got 39 to pass. Not even 40, I reckon. All right, let's have a look. I know, but well, too bad. Too bad, so sad. All right, let's have a look. We started with 500, which they gave you. Sometimes they're really nasty, and you know what they do? They only give you the 800 at the end, and you have to work backwards. That's ugly, hey? But anyway, just always be very careful what number are they giving you. Are they giving you beginning or are they giving you end? Remember, balance sheets and that are end, hey? So unless in bracket it says at beginning, then it's end. Okay, so they gave you beginning and they gave you end, which was lekker. We were working from 500 to 800. There was a rights issue, 145. So it was 100. I needed to split it, and it was split very nicely. 2/3, a third, hey? Because I was paying 2 rand for something worth 3 rand. So 2/3 was for value, 1/3 for free. So that split, it splits nicely, I say, but then the number doesn't round. So that's a bit of a pain. But it's split nicely, 2/3, a third, 666673333, giving you your 600. Then we had the cap issue, 1 for 3. Cap issues are always like that, 1 for 3, 1 for 4, 1 for 3, 600, 200, 800. Then we had to do the weighting. We're only going to weight the rights issue at value. Nothing else gets weighted. The other stuff just gets restated, isn't it? So I weight the rights issue at value for 8 months. Because it was issued in April, we had from May all the way to December left. That waits for 8 months and it becomes 44. I had 44444. They rounded to 44445. And then we totaled. Then we put in the free piece, and then we restate using the same proportion. Yeah? So we check this proportion. It probably doesn't come out at a fixed percentage. So then we just say 33333 divide by 566667, and then I multiply it by these two numbers to then push it down. Isn't it? 33 over 566 times 544 gives you the 32. 33 divided 566 times 500 gives you the 29. And I rule off again. When I do the cap issue, it's easier because I know it's 1 for 3, so I just always divide by 3. But if you look at this same proportion, that's 1 for 3, that's 1 for 3, that's 1 for 3. My proportions must stay the same always. That's what restating means. When I have cap issues or free portions of rights issues, I restate. I don't wait, I don't look at dates, but I restate. And that's the restatements happening over there. A third, and I total, and those are my numbers. And you'll see that the numbers tie up exactly to the numbers that they got when they used those ugly formulas, the two formulas, and they did the adjustment factor, and they also got the same numbers. Yeah? So that's a rights issue below fair value. And that's it for today. There's an assignment number 2. We finished number 1 last week, or week before already. Last week. So we're now going to start looking at assignment number 2. They creep up on us. Oh, no, I wanted to show you disclosure. Although we're going to touch again on disclosure next week. So remember I said to you, in the statement of comprehensive income is where we show earnings per share. So right underneath total comprehensive income for the year, we show it there. Basic earnings per share, profit from continuing operations, because if there's no discontinued, they're all continuing. And there it is. Sometimes it's in cents, sometimes it's in rands. And then here's the note for earnings per share. Basically, the notes for earnings per share is a reconciliation note. So it basically shows you how you got from the profit in the P&L to the profit number that you're using, your calc essentially, isn't it? So if they ask you for the note, set up the note and then do your calcs basically in the note. And then they also ask you to reconcile the bottom, but the bottom reconciliation is just from basic to diluted. We're going to do it more next week, because you'll see for now all we say is weighted average number of shares used, and we put those in. And then they talk about how they got to the weighting. They say the weighted average was calculated by taking these into account, the rights issue and the cap issue. And yeah, that's pretty much the disclosure. Although I would say 90% of the time, the required is calculation. Calculate diluted or basic earnings per share. So if we look at that assignment, assignment 2, it's a 44-mark question. The first part of the assignment, let's just look at the required first. You know I like to look at the required first. The first part of the assignment is to disclose the transactions related to the drilling machine. It's a lease. So we're going to do leases. After we've done earnings per share, we're going to start looking at leases. When is this assignment due? I didn't even take it down. Hopefully like end of March. Okay, lots of time, right? We're going to spend 2 more weeks doing this, and then we're going to spend 3 weeks doing leases. Like there's enough time. It's just before Easter, yeah. And then this part B is the one that we can do a bit today. Not much, but a little bit, and we may as well just do bits as we go. This part B for 16 marks, and you can see earnings per share is never as many marks as leases, and it takes just as long to get through the work. Calculate basic and diluted earnings per share for the year ended 31 March. We can't do diluted yet. You don't know what diluted is. You only know what basic is. Diluted we'll do next week. And you can see it's just a calculation. It's not disclosure or anything like that, which is usually what it is. So if we go back to the information, let's look at what relevant information is here for basic earnings per share. I have the issued number of shares at 31 March 16, which is end of year. 2 million shares, end of year, at the bottom of your total column. Then I have an extract from the P&L, and I know that from my P&L, this is the number that I like. Profit attributable to owners of the parent. You can start with this profit if you want, and then take that one off to get to that in your, if you want. I don't know. Let's look at what additional information there is. In 2013, they decided to explore the possibility of drilling for natural gas in the Karoo. Some convertible debentures are part of diluted earnings per share. So for now, you can ignore that. Yeah. So I'm going to just take this and just go like that. Okay. So for now, you can ignore the debentures. I'm only interested in shares, right? Unless they said to you that some of these debentures converted into shares this year, then they became shares. But when you read more carefully, and I have read it, it says that the debentures are convertible into one share for every 2 debentures on 31 March 17, next year. So if next year comes and the shareholders have decided to convert, I'll put them in. But if next year comes and they decide to take cash, then I don't, isn't it? So for now, they are for diluted, not for normal. Then they issued some share options. Share options are options to acquire shares. Again, I haven't issued any shares. Do you agree? All I've done, it says that they'll be only exercised in 2018. So that's also diluted. It's potential ordinary shares. That's what diluted is. So for today, nothing there. In order to fund the expansion of the existing wind farming operations, they do all kinds of funny things, this company. Wind farming. Mongomo Limited issued 200,000 ordinary shares at a fair value of 33 Rand a share on 1 October 2015. 1 October 2015. Okay. I just wanted to check if that debenture interest is in the numbers. I'm going to assume it is. It doesn't say it's not. Okay, and then here's the information about this new asset they've bought for the drilling. And then that's just depreciation and wear and tear. So it's, do you agree, a fairly simple calculation? I don't even see any pref-div adjustments or anything like that. A fairly simple weighted average number of shares calc. Working out which number to use for the top and working out the earnings per share. No comparatives required, I imagine, because they didn't give us comparative numbers for... And just remember, we're working up. Oh, you need to see it. Okay. Earnings per share. Okay, so far so good. That one was easy. No cap issue, no rights issue, but you just did an example that had both, isn't it? A cap issue and a rights issue. So it depends. Sometimes if the question is just basic, then they have to make it complicated then. Then they either do a participating pref or they do a lot of movements in number of shares, so you have to do all those calcs. If the question is diluted, then the basic is usually simple, and then all the marks are in the diluted piece. So this one was that. It's more about the diluted because there's convertible debentures and there are share options to dilute. So we're going to do a lot of calcs around that and less about the basic. So the only tricky thing here was the working backwards, because up to now we've always seen questions where we were given beginning of year. The other tricky thing sometimes students make mistakes with, they use rands instead of number of shares. And in this case, it was different. I think the other questions we've seen, it's the same. Often it's the same, never in practice, but in theory, it's the same. And then students get confused when it's not, and they use the wrong number. So we're working with number of shares, not rands. So we work with 2 million shares. We work backwards to 1,800 at beginning of year, and then we work down to 1,900 effective or weighted average number of shares. 5068880 divided by 1.9 million weighted average number of shares is 2 Rand 67. It's big. When I saw it, I thought, sure, that's a lot. But when you look at the profit, it's 5 million of profit and 2 million of shares. It is going to be big. Hey, usually it's the other way around. Usually companies don't really want their shares to be so big because it makes them less tradable. Hey, it makes it more expensive to buy a lot of shares because you have to buy shares in lots of like 100 shares each. And then it puts it out of some investors' affordability, basically. But yeah, R2.67 earnings per share. And it's just a calculation. So you show your weighted average, you say which numbers you're using, you show the formula, and you show the solution. It's not going to be masses. Out of their 16 marks, it might be 3. 3 marks. Then next week, we're going to move on to diluted earnings per share. I've touched a little bit what that is. Diluted earnings per share are potential shares for contracts that have already been entered into. We can see with these two, there are some debentures which were issued in 2013, which could convert into shares. When they convert, am I going to get extra money? No, isn't it? I'm not going to get any extra money. But am I going to have extra shares? Yes. So my existing shareholders need to know, hang on, your earnings per share is R2.67, but there are all these debentures. If those shareholders choose to convert them into shares, it's going to dilute your earnings per share. Because now the same pie, more people. That's the one. Then the other one we see here is share options. Share options, we have the same issue that we had with rights issues. Usually share options is to buy shares at a cheaper price. That's why you give them as a reward often, isn't it? In this case, the share options were issued at 20 Rand exercise price, and the market price is 30 Rand. So that free portion is also going to dilute my shares, isn't it? So that's what we're going to look at next week, those dilution calculations. And then we'll come back and we'll be able to finish this question. Yeah? All right. Most of the exam questions are on diluted earnings per share.